Okay, good day once again, traders. Welcome to today's episode of my weekly forex forecast. This is Onunako Toshku speaking for Lazarus Capital. So, guys, as you all know, my trade strategy is very simple. I'm a trade pullback continuation trader. It means once I've identified the direction of the market, I'll wait for price to pull back to my area of value. From there, I'll wait for my market participants to come in and I'll join them. And my area of value is always a support or a resistance area that price have tested in the past. So when price comes to this area, I wait for my market participant to come. Then when they want to continue in the original direction, I continue with them. And I also want to see that this area line up with my Fibonacci 5061.8. So once I've identified this location, I want to confirm that the location is in line with my Fibonacci 5061.8. When price comes to this location, I wait for my market participant to come in and I join them. I also have a ranging strategy, whereby once I've discovered that the market is trading in a range, I wait for price to come to a demand area so that I will buy, a demand or a support area so that I will buy, or a resistance or a supply area. From there, I will sell. Having said this, let's go into the business of the day. So we'll be starting with the Euro USD. Today we'll not be analyzing the BTC USD for some reason, which later I will let us know. So we'll be starting with the Euro USD. We've done this analysis in the past. What we'll be doing today is just like, to refresh our mind, because the setup we are waiting for, price have not got into our area of value. So we'll continue to wait. And we must understand that in trading, one of your major job as a trader is to wait. You must wait for your setup. And waiting is not easy, because the human brain does not like waiting. The human brain, the human mind wants activity. We want to be active, and that is why traders confuse activity from productivity. You can be active but you are not productive. Do you understand me? So one of your major job as a trader is to wait. So we've been waiting for the Euro USD, even the gold, even the Nasdaq. For the Usoil, we'll be having some change in bias. Which one we'll get there will let us know. So for the Euro USD, on the daily time frame, we can still see that the direction of the market is still to the downside. I told us that I also use the 200 EMA. Once price is trading below my 200 EMA, I'm bearish. Price is trading above my 200 EMA, I'm bullish. So we can see that the market is trading below, the 200 EMA. So we are bearish, and we can see after this change of character at this point, price broke this support area, use it as a resistance, and since then price have been coming down. So this area now becomes my line of departure. From this area, the price departed. So now we can see that it is clear that the Euro USD is still bearish. The Euro USD is still bearish. So all we are waiting is for a location where we can sell from. And I showed us last week that this location is a good location. And guys, once you have identified a location where you want to sell from, if the market did not come to that location, please just don't start forcing trade or start looking for necessary trade. So we've been waiting for the price to come to this location. This is where I want to sell the Euro USD. You can see this is a good location. Acted as a support here, support here, support here, support here. So we'll be waiting for the price to come back and use this area as a resistance. From there, continue to drop. So we've identified that the Euro USD is still bearish. We want price to pull back to this area. The market has been in a build up here for some time. You know how the market does this thing now. Eventually it will come up, take out all these support, these early sellers. After all these people selling now, their stop losses are here. The market will come here, take them out, and begin to drop. So that's what I'm waiting for the market to come and liquidate, to come and take out all this liquidity that are up here. Some people say it's manipulation. Manipulate all of them, all these early sellers here, take them out. And that is when, after I've seen that manipulation, that is when I want to join. So let's go to the 4-hour time frame. The 4-hour time frame is where we'll do our execution. So we've confirmed the direction on the daily. On the 4-hour time frame is now where we'll do our execution. This is that area. If we take our Fibonacci from this line of departure to swing high, swing low, we can see that this area is in line with our Fibonacci 5061.8. Line with our Fibonacci 5061.8. You can see that this area is in line to our Fibonacci 51.8. Line of departure, line of departure. From there, this market start to come down. Swing high, swing low, 51.8 at this point. Good, support area. Good area that has acted as a support in the past. Support. Wait for the market to come there and use it as a resistance. When the sellers come in, we'll join them. Simple as ABC. So you don't need to start. If the market did not give you that, if it takes you 1 month to wait, you continue to wait. So you wait for the market to rise to this resistance area, and when the sellers come in at this point, you join the sellers. So this is what we've been waiting for like 3 weeks now. Continue to wait. It will take another 3 weeks to wait. And you understand that when you are waiting, you are preserving capital and you are waiting for your setup. So entry will be at this area, 1.15013. Stop loss above here, 1.15473. TP1 will come back to this support that is here, 1.13295. There your TP2. Look for higher time frame target. I can see this demand area here, 1.10938. So that is it for the Euro USD. Let's now move over to the next pair, which is the gold. So for the gold, our bias for the gold is still to the downside. We are still bearish. We are bearish on the gold. The markets have not given us our entry, just like the Euro USD, so we'll continue to wait. So as you can see that our 200 EMA is trading below. Price is trading below our 200 EMA. So like I told us, the 200 EMA is an indicator I use to identify trend. I repeat again, the 200 EMA is an indicator I use to identify trend. What it means is that once price is trading below my 200 EMA, I'm bearish. And once price is trading above my 200 EMA, I'm bullish. So, and also we can see the structure of the market, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. The market have not created an equal a higher high. The market have not created a higher high, so the character of the market is still bearish. The market is still to the downside. So the next we'll be waiting for now is a good location where we will sell from. So when I take my line of departure, I can see that from this area, the market started coming down. From this area, the market started coming down. I can see there's a support here. Let's go to the line chart. There's a support here. So the market came here. Since the market came down from here, it has been dropping. So I lose this area as my line of departure. Then I want to look at the resistance area where I'm looking to sell from. I'm seeing this area here, that this area is a good one. You can see this is a good. So if the market is bearish, I want to look for an area that the market has used as support in the past. I want to look for a level that has acted as a support that will be coming down to act as a resistance. But the market is using a level. I hope you guys can see my hand. But the market is using the level as a support. When it breaks through that level, I want it to pull back and use. It's using the level as a support. It breaks through. I want it to come back and use that level as a resistance from there and start to come down. So I can see that it has acted as a resistance here, support here, support here, support here, resistance here. So this is the area where I want the market to come to. I want the gold to pull back to this area. So all these things that are happening here, I'm not interested, because during the week you can see the market going up and down. Intraday traders, and scalpers, they can get entry, but because I'm a higher time frame trader, I'm not interested in whatever the scalpers are doing. I wait for my higher time frame setup to mature. And that is one thing you need to understand as a trader. You must define the kind of trader you are. If you're a scalper, stick to your scalping. If you're a day trader, stick to your day trading. And if you're a swing trader, if you're a higher time frame trader, forget about what the scalpers and the day traders are doing. It's none of your business. Because some of you guys are swing traders, but you've been waiting for entry and your entry have not come up. And you see your friend who is a scalper, he's just showing you screenshot that he sold this today, he made money, he bought that today, he made money, and you yourself now want to force yourself and start looking for entries. No, you don't have to do that. Know the kind of trader you are. If you're a scalper, stick to your scalping. If you're a day trader, stick to your day trader. If you're a swing trader, stick to your swing trading. So I'm a swing trader. Whatever that is happening, like all these things, all this movement that is happening here now, I'm not interested in them. What I'm waiting for, come to my location. If you don't come to my location, I'm not interested. So for the gold, I can see that this is a good location for me to sell the gold. The gold is bearish. I've identified that the direction of the market is bearish. The next thing is for me to identify a location where I want to sell from. I can see that this area is a good location, acted as a resistance here, support, 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 resistance. This is the area where it is safer for me to sell the gold. So what up? And if I go to, if I take my Fibonacci now from this line of departure to this location, I can see that I have a good 5061.3 at this point. And guys, that is why when you see me do this, you see that the first thing I check is not the Fibonacci, but I want to see that area. I want to see the area. Is this area a good location? Is it an area that price have used as a support and a resistance in the past? It is when I've identified that, then I want to take my Fibonacci. Do you understand? So, so because the market is not reacting from an area because it's just a Fibonacci area, no. It's because that area, price have reacted, price have used that area in the past because the market has memory. Do you understand me? So you can see this area is a beautiful area, fantastic one. Resistance, support, 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 resistance, come back to act as a resistance. And that you need to understand that because an area is a good location does not mean when the market comes to that area, if you are expecting for the sellers to come, that the sellers will just come in. You need to wait for your confirmation. You must wait for your confirmation because an area is a good support does not mean if the market comes to that area, it will start buying. You must wait for confirmation. So now I've identified that this area is a good area of value, resistance, support, 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 resistance, come back to that as resistance. The next I'll be waiting now for market, for the market participants to come there. So I will sell. If I go to the line chart, we can see also that this area, look at the line chart, resistance, support, resistance, come back to act as resistance, good location. So I will just be waiting for the gold to rise into this area. Waiting for the gold. Wait for the gold to rise to this area. And when my sellers coming from this point, I'll join them. And somebody might ask me that if I know that the gold will rise to this area, why don't I just buy from here? And when it gets here, I will exit my buy and I will sell. Good question. And guys, this is one of the things that has kept me stuck in the past. Now, I don't know that the market will rise here. I don't know if you can see that last week we expect the market to rise here. The market did not rise. This price can still decide to start falling from here without pulling back. So that is why we don't know what the market will do. If you see any trader that tells you, I know what the market will do, I'm sure that the market is going to do this thing, show me that type of trader that will show you a losing trader. Nobody knows what the market will do. We are not here to predict the market. Our own is to react to what the market. So it means you must wait. Let the market confirm to you that I'm doing this. Not you coming to assume that the market will do this. Now, I'm assuming the market will buy. I start buying. I start taking buy entries. No. If it's going up here, let it go. I will just wait for it to come here. When the sellers come, even when it gets to this area, I must wait for the sellers to come in before so I will join them. Do you understand? So I'll wait for the market to rise to this area, to this resistance area. From there, I will sell. Let's go to the 4-hour time frame because that's where we do our execution. So on the 4-hour time frame, we can see that area, a good location. A good location. So we're waiting for the market to rise, for the gold to rise to this resistance area. From there, we will sell. Entry at this point, 43.28. Stop loss at this point, 44.62. TP1 will come down to this support area at 39.77. And your TP2 can come to your higher time frame targets. Guys, for the gold, there's a level at this point that you guys have to be wary of. And I told us last week that there's a demand area here. There's a demand area here. So if you are selling the gold, be careful at this area. at this demand area. You can see price launched from this place, and you can see that there's still some pips here. Price have not gotten there. So in the coming days, if the gold drops to this support area, you know, and because of this demand area, if I get a clear signal for buy, I can buy to this resistance area before looking for sell entry. But if the gold continues this rise without coming down here, then I'll wait for it to come here so that I will sell. But if it comes down here, you know, to fill this remaining pips that are here, and I see a clear buy from here, I may buy. You know, but if the entry did not line up properly the way I want it, I will just leave it and wait for the sell, because you know the gold is still bearish until we have a complete change of character. So for your take profits, can use TP1, can take TP1 at this support area here. Can take TP1 at this support area here at 14.94. Then your TP2 can come down to this demand area at 39.25. So now let's move over to the next pair, which is the Nasdaq. So for the Nasdaq, I told us last week that for the Nasdaq, I'm still bullish on the Nasdaq. I'm still bullish on the Nasdaq because I told us that I can see that the Nasdaq can be trading in this range. And I told us that once the market is trading in a range, I buy from demand and I sell from supply. You can see I told us last week that the market have not gotten to this demand area. There are some pips here. So during this week that just ended, we saw the Nasdaq closing, we saw the Nasdaq coming down fully to that demand area. This is the demand area, and Nasdaq coming down fully to that area. We can see there's a bearish candle closed below this area, but I cannot start selling the Nasdaq because I'm not a breakout trader. Breakout traders can start entering after this close, but I'm not a breakout trader. For me to sell the Nasdaq, I must see a clear movement below this area. Then a pullback. Then a 5 phase to close back above this demand area, gets here and stop, and the sellers come back. This is the only scenario whereby I'll be looking for sell entry. If price drop down, not this close below this demand area, I must see a significant move below, and the pullback by the buyers, they fail to close above, they get here, they stop, and the sellers come back. This is where I will join the sellers. Anything aside that, I'm still bullish on the Nasdaq. In the coming days, if I see the Nasdaq close back above this demand area, I'll wait for pullback by the sellers. If they fail to continue down, they get here, they stop, and the buyers come in. At this point, I will buy the Nasdaq. So I'm still looking to buy the Nasdaq from here. I'll be seeing this thing that is happening here just like a manipulation. I can see that at this level. Hold on a second. Okay, so I can see that this level here, right here. This level right here now. I'll show this a little. So this level right here, we've not gotten a clear break. You can see there's a wick down here, and look at where this price is now. So I'm not going to look at this this bearish candle closing below this area as a confirmation that the market is now bearish. No. In the coming days, if the market wants to be bearish, I want to see a significant movement below this demand area. A significant move below this area. Then a pullback. A pullback. And when the buyers come, they should close back. If they fail to close back, they get here and they stop, and the sellers come. So this is the only scenario whereby I'll be selling the Nasdaq. Anything aside that, I'm bullish. I'm bullish because what this candle close below this demand area is not a guarantee that this market will continue bearish. It has to continue. It has to come down. Then I'll know that, okay, yes, the sellers are really serious. Then I'll wait for a pullback to this demand that will turn to resistance area. From there, if the sellers come in, this is where I will join them after a pullback, because I'm a pullback continuation trader. There must be a pullback. I'm not a breakout trader. I'm a pullback continuation trader. So, anything aside that, in the coming days, if I see the buyers coming and close below this demand area, and the sellers try to fight back and they can't, they come back and they can't close below, they get here, they stop, and the buyers come, I'll join them here. So our entry will be at this point 28,358, stop loss below here at 28,145. TP1 will come back down at this resistance area at 23,104. Then TP2 will come back to this supply area at 30,707. Let's move on to the next pair, which is the US oil. So for the US oil, our bearish for the US oil in the coming days will be to the buy side. In this coming week, I'm bullish on the US oil because I can see that there's a demand and price is trading above our 200 EMA. This is on our daily time frame. So price trading below 200 EMA on the daily time frame is it's a strong indication of a bullish move. And I told you guys the idea behind my trading. This is why I love the trend pullback continuation trader, because it is in line with my idea behind trading. Like I told us, having spent years going back and forth in this industry, I had to sit down and ask myself, what is trading? What is this trading that we are talking about? I want to look at trading in the real, life sense, in our everyday life. What is trading? And I discovered that trading is nothing more than I identifying a product that is in demand. Now, this is a product. Now, forget about the name here. Now, forget about this US. So it can be anything. It can be gold, it can be GPUSD, it can be GPJPY, it can be USD Chef, it can be NZD whatever. It can be apple, it can be tomato, it can be cucumber, it can be iPhone. Just forget about this oil here now. So trading is nothing more than me identifying a product that is in demand. This is a product. You can see the price just moving up. It means there is demand for this product. Now, once I've identified that there's demand for the product, that's one. The next thing, I want to find out how much are people willing to pay for this product. Now, I can see that they are willing to pay as much as $92 per barrel. $92. Let me not use per barrel because we are just picking any commodity. I can see that people are willing to pay $92 for this product. Now, for me to buy this product and sell and make profits, I cannot buy at this product. I must look for a way where I can get this product at a cheap price. That is when the pullback comes into play. Now, you've identified the product and you've identified that people are in need of this product. You've identified how much you are willing to pay. Now you want to see, how can I get this product at a cheap price? Now, that is when the pullback comes in. I now see that if I can buy this product at this price, $81. If I can buy this product at $81, I can sell back to these people at $92. So now that's when I'll be waiting for price to pull back. Because if the price did not pull back, if you buy from here, you cannot make profits. Because you can buy and the price will start to drop. If you buy, who are you selling to? So that is when I will now wait for a pullback. Price come down to this level. From there, when the buyers come back, I will now join them. So first thing first is identifying a product that is in demand. The second is knowing how much people are willing to pay for this product. Then the third one is finding ways in which I can get this product at a cheap price. Then once I see that product, I see where I can buy that product cheap. I find out if those who need the product, if they are still interested. If they are still interested, I will buy it and I will sell to them. The difference in the amount I bought and the amount I sold becomes my gain. The same thing. This is the same thing. This is how we do trading in our everyday life. Translate it now to the online trading. That is why I love the trend pullback continuation trader, because the trend pullback continuation trading fits the way I do trading in my everyday life. It is when I begin to look at things this way, that is when I begin to understand the market. So before I start to talk about chart patterns, before I start to talk about Fibonacci, before I talk about trend lines, before I talk about support and resistance, before I talk about RSI, the order block, the fair value gap, the Y cut, this is the foundation. This idea comes first. Upon this idea, I now begin to talk about strategies and indicators and what have you. So, for the US oil, I can say that the market departed from this area. The market departed from this area. So I'll be waiting for the market to pull back to this location. It's a good location. You can see price acted as a support here. Okay, so we can see that this area is a good area of value. Acted as a support here, there's a gap here, so we'll be waiting for the price to pull back to this support area. From there, when the buyers come, we'll join there. And if I take my Fibonacci from this swing low to this swing high, I can see that this area is a good 5061.8 Fibonacci area. This area is a good 5061.8 Fibonacci area. So I'll be waiting for price to come down to this support area. Then when the buyers come in, I'll join them. So the coming days for the US oil, I'll be looking to buy the US oil, pull back to this area. Then when the buyers come back at this area, I'll join them and take the price back up. Now, one other thing I want us to be careful about the US oil is that the same way I use the Fibonacci in my favor, the same way I also consider the Fibonacci when I'm in a trade. Now, if I'm looking to buy now, I want price to come to a support area that is in line with my Fibonacci 5061.8. Now, when I get an entry and I'm buying that product, I want to be careful of the Fibonacci of the sellers, especially if that market has a supply and a demand. Take for instance now the US oil, you can see there's a demand area here, there's also a supply area here. Now, if I take the Fibonacci of this movement from this swing high to this swing low, I can see there's a strong Fibonacci area here. That is even when this market is even reacting for. You can see how powerful the Fibonacci is. The market got to the 50% Fibonacci retracement of this movement from this swing high to this swing low, and that is where the market is reacting from. Now, once I'm buying this market from here now, I'll be careful of this area because anything can happen from here. Forget about the war that is going on in the Middle East. The oil can get to this area and start coming down back. So if I buy the US oil from here, my TP1 will be, so entry will be at this point at $80 per barrel, stop loss below here at $77 per barrel. TP1 will come back to this Fibonacci 50, this resistance area where the price is dropping from at $92 per barrel. Then my TP2 will come here, so that just in case if the market continues to rally, I can take advantage of the move. So TP1 will come, entry will be at this point $80 per barrel, stop loss below this support area at $77 per barrel. TP1 at this point at $92 per barrel, then TP2 at $119 per barrel. So guys, thank you so much for staying to this long. Until I see you next week, God bless you.